crashing down the quality control. Somebody threw a span and they threw him in the hole. There's rumors in the loading bay and anger in the town. Somebody blew the whistle and the walls down. The ballroom, they're trying to trace the smell. There's a leaking in the washroom, there's a sneaking personnel. Somewhere in the corridor, someone was heard to sneeze. Goodness me, could this be industrial disease? Caretaker was crucified for sleeping in his post. Refusing to be pacified, it's him they blame the most. Watchdog or rabies, the foreman got a falaise. Everyone concerned about industrial disease. There's panic on the switchboard, tongues and knots. Some come out in sympathy, some come out in spots. Some blame the management, some the employees. Everybody knows it's the industrial disease.
Good morning, everyone. Great to see so many people in here nice and early this morning. Clive, good to see that the dog did not eat your train ticket this morning. Wonderful to have your company again. Now, as Rob Murdoch from Oztech reported overnight, when the team at RIU round them up in Sydney, they round them up well and truly. It was a massive day yesterday. It's going to be a massive 2 more days here at the conference. Huge number of delegates around in our exhibition centre. We've got more than 100, so we've got a lot to get through. And I think Rob was saying there was a lot of reading for analysts to do overnight. There were 49 investor presentations submitted just yesterday, so they've been very busy little beavers out there. And there's actually a lot of material, of course, generated at this conference. And I've said it before, I'll say it again, just as a reminder, anything that you would like to see again, you can do so on our YouTube channels. So go back, have a look at it. And I was having a bit of a laugh with some of our delegates today about being hard of hearing. So some of you have moved up the front, which is very, very responsible of you to ensure that you can get all the information. When you do look back at the YouTube channels, though, I'm hard of hearing as well. I have hearing aids. You can actually opt for closed captioning. They do auto closed captioning, which is awesome. So you can go back and hear everything as well as read those presentations too. Now, Our first speaker this morning has been our last speaker for a number of years. This year, Jackson and Stu have served him up with a big old challenge. He has got to open day 2, make it punchy, make it bright, and make it to time. So apparently this fella has always got a lot to say. For more than 18 years, Noah's Rule has been providing expert market risk and debt advisory services to the global mining resources and importer and exporter communities. The firm is known for its frank, its robust approach across metals, currency, interest rates and debt markets, as well as capacity to help companies gain clarity in uncertain environments. And together with helping firms manage their long-term strategic positions in these assets, or in these markets, Noah's Rule provides benchmarked weekly short-term trading advice across a broad range of markets. With a presentation today entitled Cheap at Twice the Price, be prepared for 15 minutes of jam-packed information delivered in the only way Noah's Rules MD, Mr. Sean Russo, knows how. Sean, I will ring the bell at 13 minutes. I will be standing close to you at 14. Would you please make Sean very welcome this morning?
Thanks very much. Thanks, so many people coming up nice and early. Thank you to Stu and Jackson and all the team for this, bringing the circus to town. It's very nice to go to one of these things where you bump into all your old colleagues and old clients and new clients and can go home and get your own bed. For the Sydney side of that, doesn't happen very often in this industry. So this is wonderful. Cheap at twice the price. That could refer to the fees we charge for our services to our clients, but it doesn't in this case. It refers to commodity prices, and I'll get to that in a minute. But I just want to sort of make a couple of statements or make a couple of observations that sort of I think will serve you well over the long run that might sort of have some context to what I'm about to talk about. One is that we overestimate generally as people what we can do in a day or a year. Certainly I know a lot of our clients do, but we underestimate quite remarkably what we can actually achieve in a decade. And I'm also reminded as we get into this amazing change in technology and stuff that in just slightly more than the span of my very short life, we went from not being able to fly to landing on the moon. I think that's quite extraordinary if you just think about that for a minute when you think about some of the challenges of changing our energy mix and the other things we're doing. That when Kitty Hawk, the Wright brothers were there, that if you'd stood there and said, yeah, in 72 years or 71 years, we're going to take from this flight that wasn't as long as the wingspan of a jumbo jet to putting a man on the moon, you would have said bullshit. Well, you would if you're an Australian. The Americans would probably be more polite. The other thing I want to say is that average returns sustained over an above average period of time yield extraordinary results, right? So that means buy and hold. That only is relevant if you actually know what to buy. It's all in the decision to buy is the issue, right? Because we've all had the experience in mining stocks where, what's a stock that's fallen 90%? That's a stock that's fallen 80% and then halved. So I think we've been in an environment where that was not that uncommon, and we've seen those periods where the environment is changing. So what to do? Well, the first thing is to avoid the weeds. If you go anywhere, you go to Hollywood, you want to hire a convertible car and drive down one of those avenues, there'll be palm trees on both sides. They won't be cocos palms. Cocos palm is a weed. But when we open up new estates in Australia and people want it to look like an established neighbourhood quite quickly, they always plant cocos palms because they grow very quickly. They grow very quickly, but they're ugly. And they get to about 8 years and your wife says, cut that bloody thing down, it's just a mess. And you're 8 years behind on planting a Belangolo palm or one of those other palms that are quite fantastic and grow for 100 years. Your challenge, my challenge at a conference like this is to identify the companies that can build that long-term growth, because we're going into one or more decades of amazing sort of potential growth as the whole EV thing comes behind. Goldman Sachs say that the EV needs in the world over the next 3 decades are like 3 decades of what we had when China was welcomed into the WTO in the 2000s. So avoid the weeds, take the view for the long run, build that sort of path to riches between splendid palms. And you'll generally find those splendid palms are mining companies that hedge. Why is that the case? It's because they understand that previous comment about average return sustained over an above average period of time yield extraordinary results, right? You're not looking for that fast growth. You're not looking for people to say, oh, I'm here to give you exposure to the commodity price. Here, I'm here to make money for you and give you exposure to the commodity price. There's a very big difference. When water or money flows out of one place, it must flow somewhere else. This is a canal bridge here. The top, you come in on the boat goes from up the top to down the bottom, right? And you can see the diagram on the side. Well, markets are exactly the same. In this case, I think it's going to be in reverse, and you'll see what I mean in a minute. But the whole idea is we understand money like water must flow. There's a certain amount of money. They keep printing more money. It has to flow somewhere. When one sector gets overdone, money flows from that sector into an undervalued sector. It flows slowly at first and then faster. The issue, if you looked at mining versus general equities, which I'm about to talk to in a minute, the difference to this diagram would be one of them is very large, one of them is very small. We're in the small one. You do not need very much money flowing from general equities into this sector to make an extraordinary difference. In fact, most of the people that would like to get exposed to commodities actually can't get set in any company that's presenting here because their minimum investment would probably be too much of your market capitalisation. So that's the benefit of all us in the room. We're getting in early. We're getting into these ideas. We're going to be taken on the journey by the people running the companies out here, and then they'll get to a size where all of a sudden we think they're expensive and the rest of the world finally thinks they're investable. So you must remember that. This is my favourite picture. This is the picture that absolutely dominates the way I am managing my personal finances. Disclaimer, you should not necessarily run your business the way I run my personal finances. Playing catch up with after 2XYs, I've got to go pretty hard to this last phase. But GSCI is the Goldman Sachs Commodity Index. It's a basket of commodities that allows people to ring up Goldman Sachs and say, buy me $1 billion inflation hedge. And they go out and they invest $1 billion in a whole range of futures and forwards in a basket of commodities to give their investor that mix. Now, that's something that we can look at. Now, this particular chart started to become common in 2017. I'll update the chart for you in a minute. But in 2017, people were saying, oh, commodities are unbelievably cheap. You know, they're stupid cheap, in the way my kids would talk. It's like this is as cheap as during the dot-com bubble, and this is as cheap as in the early 70s, down there in the bottom. The interesting thing is, if I look at this right now, I feel in my 59 years, I can never remember a time where the world felt more like it was approaching a crisis than right now. And we're down the bottom of this graph. In fact, you'll find out in a minute we're even lower than where we were in 2017. So I have spoken about this graph at this conference in the past, and I did caution in the past that yes, it was cheap, but it was still falling. It wasn't going up. So the commodities might be all right, but it would still be easier for the people that don't get how important this industry is to the world to invest in other stuff that was going up faster, like cryptos and a whole range of other crap. So marijuana, when that was the go. So, you know, this is extraordinary if you look at it. And I actually think that this graph, in some part, plays a role in what Putin's done. And I'm not in any way suggesting I've got one agreement with what he's doing. What he's doing is absolutely atrocious. But what he is reflecting in a way is that people who produce commodities are not getting the value for the commodities that they should be relative to what's happening in other parts of the world. And here's an interesting graph for you. You remember on the left-hand side of that graph in the 70s, before we had that big, the Gulf crisis. Now everyone talks about the fact that that crisis was really about the Arab states attacking Israel. They never intended to take over Israel. They really just wanted to remind the Americans that they were meaningful. And in particular, look at the gasoline price there. You know, America was having this boom right through the 60s and 70s. And gasoline was 60 cents a gallon. Americans are driving around in the long, you know, you can put your golf clubs in the boot long ways, right? I mean, it's just obscene. Right? And meanwhile, the Arabs all of a sudden seeing the wheat price go up, and they actually couldn't sell enough oil to buy wheat to feed themselves. And you remember the more recent Arab Spring, it was the same thing. When food prices go up, the rivets start to pop in certain economies. Well, it's a bit hard to see there, but it looks like that blue line went up in line with the red line. It didn't. The blue line went up first. So in amongst all the other discussions that those guys were having with Kissinger and the like about what was happening with Israel and about the oil, they said, one of the reasons the oil price has to go up is we cannot buy enough wheat. And you guys are living high on the hog on our cheap oil. And it's over. And they raised the price of oil. You can see what happened. Now, we know what's happening with wheat and oil at the moment. So it's some interesting parallels. And as I say, I don't think that what happened here is lost on Putin. So that, I think that's just an interesting parallel of and how quickly these markets can move at these inflection points and the kind of things that actually driving. And it's similar right now. Now, in 2017, I was also suspicious of why they chose that graph to cut off where it did in the 70s. So I sought out a longer graph, and Simon Klimt, who's in the audience from Gresham, actually found this. Sorry, I'm supposed to be at my meeting at work right now. Sorry. That's how important this is. I skipped that for this. Simon found this graph, and I'm greatly thankful to him because he also introduced me to Goering and Rosenzweig. And if you don't subscribe to their stuff, which is all free, it's the most extraordinary information for free on the web you will find about mining. Their copper depletion article is incredible. Anyway, what I found here is I looked at this and went, wow, okay, so we are lower than we were in the late 90s. And I remember how bullish I was in the late 90s because it couldn't get any worse in the mining. I was living in Perth at the time. It was cut your wrist type stuff. But and here we are, we're cheaper. But you go back, it's cheaper. Well, that graph, that's the front end now of this graph. This is the way that we do the graphs at Noah's rule. So green is when there's an excess of buying pressure, and red is when there's an excess of selling pressure. So that graph, that's that low. That's the late 90s. That's when this graph got currency is sort of 17, and here we are. We just kept falling until very recently. Now, I believe that this is very similar to this in nature, and I believe that makes perfect sense with that lineup of the late 70s, the late 90s, and here we are now. And, you know, this has been an amazing change, but much of this has actually been equities, general equities rolling over, right, in terms of making up this ratio, not commodities necessarily rising, although they have been. And so what we're looking at here is that essentially the purchase power of a basket of commodities versus the value of equities. Now, it's ridiculously cheap, and historically crises happen when it's up here, and this is a log scale, by the way, so each of those bands is a double. So now, even if we double, and this is where cheap at twice the price comes from, even if we double, we're only back to where it was stupidly cheap in the late 90s. That's really hard. It's really hard to get your head around when you look at the price of copper today and you look at the price of oil today, you look at the price of gold today, and you're going to tell me they're all at record highs. And I agree with you, they are. It's obvious. You don't have to agree. We can just look at the chart in many cases. But that was also the case in about 2005, 2006, when old timers would tell you these copper prices are unbelievable. I can't, you know, these copper prices were fantastic, and then they tripled. And so, you know, it's not impossible that can happen here. And this is a very, very busy graph. But the main thing to look at is at the top line there, March 99 to 2000. Sorry, I have to do that once a year. That is the gains that had already been seen at this point, all right? So the GSI was already up 101% in January 2001. It went up to put another 261% on over the next 8 years. The other thing to remember here about this slow period here relatively, go back to what I said, above average return sustained over an above average period of time yield extraordinary results, right? You had to be in the right mining companies through there that were patient, that were building, and were doing things in the right way. There was a few bumps along the road. But look at these other things here. You know, like, yes, these numbers are higher. This most recent last 2 years, yes, commodities have been stronger. But, you know, GSI is up 123 as opposed to 101. So some of these moves may not be as big in the future, but there is every potential. History certainly shows us here that in the past, you know, copper was up 45% when we started that last boom. This time it's up 87. Copper ended up 456%. You know, these are the kind of moves we had, and the world did not end. I mean, right now, if you said to people, copper's going to triple, these other things, they say, well, the world's going to end. Well, it didn't end. Commodities just went up a long way. And a lot of rivets popped around the world. And we had a GFC in the middle of it, which screwed an awful lot of people. And the companies that were hedged through here came out the other side, got taken over, did very well. And the companies that weren't hedged through here, many of them went broke and aren't here today. And that's just the nature, again, of we just chopped down a lot of cocos palms right about here. But, you know, if you're invested in the other guys, you know, it was fine. So messy graph, but I hope you get a very busy graph, but I hope you get the picture. Now, this is my other favorite ratio, just as we sort of get into time to wrap up. The bell's going to go in a minute. This is the Dow Gold. Oh, here you go. The Dow Gold ratio. So this is the relationship between gold and the Dow Jones. And the reason I really like this graph is that, you know, equities investment going right back in time, we know what people could buy in the US, and it's probably, you know, been the biggest and most important economy in the world for at least the last century or more. And gold's been around for 5,000 years, and you can talk all you like to the crypto hodlers and what they like, but, you know, there's still an unproven thing. This is a real asset. Gold is a real thing. 5,000 years of history. It's not a bad thing. It's better than US dollars. It's better than any other way to benchmark what something is worth. The year that I finished high school, you could take 1 ounce of gold and you could buy one of every share in the Dow Jones. The ratio was 1 to 1. It's quite extraordinary. When Pierre Lassonde started coming to Perth and telling us we shouldn't be so bearish gold back in the late 90s, that ratio had got up into the 30s. He believes it'll go back to 1 to 1 at some point in the future. And I certainly very happy to believe that could be possible because it's happened in my lifetime. So it could certainly happen again. Now, at the moment, you know, we're sitting up here at about 17.4 or something. But the important thing to look on that graph is that we've just put on a red background again. We're under this 200-week moving average. And in that way, we look very similar to, surprise, surprise, the early 70s and the late 90s. So people are students of history, clearly. You know, history doesn't repeat, but it rhymes. Big investors are looking for these type of things. People are looking where they can put money. And they are starting to see here again, the tide is turning, that people are starting to say that gold is outperforming equities. And what I do know is there are many investors around the world who hate gold. Just as one example, they don't like mining generally because you all deplete your assets, right? They all don't think of it, you know, there's a wasting resource. but they don't value how much it actually puts into every other part of the economy. But there are a lot of investors out there who do say, I hate gold, I don't like to buy it, it doesn't pay an income, but if it's outperforming equities, I have to own some. And it's been outperforming equities now for the last couple of years. And if that starts to accelerate, such as it did in this period here, and we all know, you can all remember here, the people in the room, I don't have to show you a gold graph for you to know what happened to gold between 2001 and 2011. All right, I mean that when that background is red, that's good for gold. And thank you. And what's good for gold is good for the broader commodity base, because generally everything is, I think, is going to outperform gold. It certainly has a potential. Most other metals have a strong potential to outperform gold, and they've shown that to us in the past. So really, I mean, I think the theme is, if I just, no, I don't have to actually. I thought ahead for once. No, I didn't. Let me just go back to the beginning. I just want to end with that picture. Keep that picture in your mind. In fact, it's even lower now. Goering and Roosevelt's talk about commodities being radically undervalued. Now, that's radically undervalued relative to general equities. So if you do nothing else, for those of you in the room that may have this strange idea that you invest in things other than resources, take some of the money that you have invested in things other than resources and allocate it over here. Those of you who like to be heavily invested in resources, I suggest that you find those resources companies that are the palm trees, not the cocos palms. They've got hedging. I saw a couple of good examples yesterday. Neither are clients, by the way, or not yet. Aeris and New Century. No debt and hedging. That's really great to see. That's a big change from a few years ago. Management teams are taking very seriously being the business of mining and giving you the long-term potential that this market has. Because when this starts to move towards the upside, it will move quickly. And it does seem to me like we're kind of overdue for a crisis, so we're certainly heading towards one. And crises happen at the top end of that graph. Thanks very much for your time this morning.
Sure, Russo, brilliant. I'm not going to say any more. You've taken up the time. That was fantastic. We could have listened for longer, couldn't we, everyone? Go and chat with him. I very quickly wrote down those little bits that he gave us at the end. Did you guys write it down? Yes, I've got those ones there. Hey, our virtual presentation is coming up to stage at the moment. Our first explorer to take to the stage this morning is Charger Metals. They're on the cusp of their first drilling program in just outside of Darwin and also just outside of Perth. David Crook is Charger's MD. He was with Pioneer for 16 years, but he is very, very excited right now with the prospect that's in front of him and in front of you. Would you please make Charger Metals' David Crook very welcome?
Thanks very much, Chrissy, and it's always very difficult to follow Sean. I've spoken around him at different times. Very, very interesting. We're at the other end of the spectrum, of course. So hopefully you'll get something out of this. Our booth is just around the corner in the thing, so this will be quite a short presentation. I normally take about 9 minutes, and you're very welcome to come and get some more detail at our booth afterwards. So as Chrissy said, we listed in July last year. We're a well-funded company, and we acquired our assets sort of in between 70 and 85% from Lithium Australia. Lithium Australia were one of the first movers in the exploration space for lithium, and so it was quite a well-formed portfolio. Lithium Australia decided that the technology space is where it wanted to be, and so a group of us got together, acquired the assets and floated it last year. Our background is systematic exploration. That's been my bread and butter for 40 years, mainly in Western Australia. And we're at the point we've done a lot of the targeting now on these projects. And as Chrissy said, they're drill ready. That's a busy slide by the standards from here, but listed at 20 cents, we've been hovering around the 70-cent mark now. So we've been well regarded by the market this far. We do have some interesting shareholders. Lithium Australia and Adrian Griffin collectively about 25%, but we've got Ausbil, they've come onto the register recently, Gunsynd out of London, the Lynn Group out of the United States, so it's quite a respectable group of shareholders for a company in our position. So the first project, as Chrissy said, just outside of Perth, we're getting ready to drill. We're just waiting on the final POW to be approved. We've signed up the drilling contractor. He actually lives in Northam. For those of you that know anything about Perth, that's about just another 30 k's out. So here's Perth, just out the side of, we're about 100 k's out of Perth, not quite, but we're only 28 k's from the Gill project. So it's exactly the same, we believe, geology as the Gill project, and that's what makes it interesting. The project was initially a bauxite project, and one of Adrian's great ideas was to get these the bauxite databases and the samples from them, and he ran the bottom of hole samples for platinum group elements, copper and nickel and things like that, and that was the basis of this project. So we started it with a multi-element platinum group element and copper anomaly. We flew VTEM over it, and this is an image of the VTEM. That's an electromagnetic technique that picks up conductors that may include massive sulfides. And this area here absolutely howled at us. So more recently, we've now been over it with a fixed loop, which is another kind of EM detecting these conductors. And this is a composite picture of that. So that's the area with geochemistry and the geophysical target. And like I said, we're just waiting for our POW and we'll be out there drilling. The second project just outside of Darwin is, it's really interesting. Core Lithium are going into production at the moment. They're talking about crushing their first ore in the next couple of months. The grey area on this is owned by Core Lithium, and we have a very handy excision within their project. Now, Core Lithium is a $2.5 billion company, and they've got, it's about 15 million tonnes of reserves feeding into the plant that's coming now. So we suspect that any spodumene that we discover in our project there is going to have an implicit value based on the way that Core is valued now. And as I said, $2.5 billion. So again, we started with the historical data sets. Haddington, which had been in the pegmatite business for years, had this ground looking for tantalum. We've come in with our lithium ion. We've got these really nice lithium anomalies. Core announced spodumene results from just here and also just here over the last couple of months. So this is a known spodumene area now, you could say. We know that there are pegmatites. They've all been mapped in these areas here. And now we've layered on the new lithium geochemistry. Again, we're just going through the mines department process. So it's quite an involved set of negotiations with the mines department and the Aboriginal people, ticking some boxes and making sure everything's right to go. That's a photograph of the tenement. That's one of these pegmatites sticking out of the ground. The pegmatites all tend to have this northwesterly trend. That's some aeromagnetics that we flew. And drilling is never easy, but this is a great project just waiting to be drilled. These are the results that came from the Ahoy area just off our tenement. So you saw from the aeromagnetics that the fabric of the land seems to be in this way here. The 7-up pegmatites sort of wandered their way around through there, but these are very handy numbers to have in your portfolio. The third project is much more of a grassroots thing. It's about halfway between Perth and Kalgoorlie. Lithium Australia discovered spodumene down in this area here. There were 9 pegmatites up in this area here. And again, we've done our geochemistry. Straight away, a nice lithium anomaly down here. It's the spodumene, and we've done 6,000 samples through here. We're running those through an XRF with a lithium indicator algorithm on it. And as that's done, those samples will then go into the lab. At the moment, putting them through the lab might take 3 or 4 months. So we just need some kind of indication of what's happening first so our geologists can get out there mapping and we can get some of the other work happening concurrently. So that's really about it. We're a new company. We're well funded. We've got a good group of geologists. Everybody says that, but we have collected quite a good group of geologists behind us. We've got a well-credentialed board. We've got 3 really interesting projects. The Coates project right near the Julimar thing. That's another company. Well, it's surrounded by, of course, Chalice, which is again a $3 billion company. So we're in the same ballpark as these billion-dollar companies. We've completed our targeting. We're getting ready to drill as soon as we get our approvals, and watch this space. So really, that's all I want to say. Reiterating, our booth is just outside the other doors, just on the right-hand side as you walk through. If you'd like more information, please come and see us. Thanks.
Thank you, David Crook. He's quietly spoken, but do not underestimate the man and the power of some of the investments he's been involved in. Go and have a chat with him and get some more information out of him. He might be a bit shy up here on stage, but he has got a lot to share with you, I can promise you. Rex Minerals is number 2 on stage this morning. That's an ASX-listed exploration and development company with projects in South Australia. There's the shovel-ready Hillside Copper Gold Project. And what did we learn yesterday? We learned to say this word correctly, Nevada. Nevada, USA, the low-cost heap leach hog ranch gold property. I love it. Rex's EGM Investor Relations and Business Development is this gentleman, Peter Bird, and he's here to talk us through investment potential this morning. Please make him very welcome, everyone.
Yeah, thank you. And thanks very much, everyone, for being up bright and sparky today to hear the Rex story. What I'll do is run you through a series of slides and do my best to stick to time so I don't get the gong. There's the necessary, I'll just move over a bit. Can everyone hear me okay? There's the necessary disclaimer. So what I want to talk to you about is a proposition. This is a story of a number of facets. The first one is scale. Scale's often a rare thing in our sector, but we're fortunate enough to have it. This is a proposition which has 1 million tonnes of metal in reserve, 2 million tonnes in resource, and the commodity is copper predominantly. I'll also touch a little bit on gold. So what about copper? And I'll talk about this a little bit. The copper is the blood in the veins, if you would like, for the tech green revolution that we're undergoing now, the sort of future green carbon world. You just can't function without it. And hopefully I'll illustrate that in the slides, and you'll see the last point I want to make, which is the value proposition of Rex. So they're the things that I'd like to remember as this presentation: scale, its contribution to the green elect tech, and the value proposition of Rex. So let's talk a little bit about the commodity market, and this will be in a number of presentations here, but it's worth reiterating. So copper, for those of you who are not aware, is about a 25 million tonne per annum consumption market. And it's been growing at a compound rate of between about 1.5% and 2.5% per annum compound since the 1950s. That 25 million tonnes is in your normal consumption commodities, so pipe and wire. So it's in every part of your home. It's when you flick the toaster on in the morning, have your shower, look at your phone, get in your car, get in the train. It's everywhere. But the thing that's changed, the paradigm shift, is, as I said, clean, green, elect and tech. So as you can see in the image there on the right-hand side of the screen, by 2030, so in this current decade, there's an additional 5.2 million tonnes of consumption required just to satisfy that sector of the market. And you can see some little images there on the slide: electric cars, batteries, solar, wind power, etc., etc. We're all aware of it. It's in the news every day. So you can see pretty quickly we have a bit of a supply side problem, as illustrated by this slide. So in that same time period, at the end of this decade, the predictions are, despite the fact there are a number of mines coming into production, we're going to be net short of metal by over 2.5 million tonnes. So just contemplate that thought. And the copper price is already sitting in the sort of mid $4 numbers. And for those of you that are in the room to see Sean's presentation, we're probably at the bottom, not the top of the potential cycle. So let's focus in a bit now on Rex and our core project, which is the Hillside project located in South Australia. First world jurisdiction, fully permitted, ready for development project. Stage 1 of the project has a 13-year mine life with the ability to expand to 30 years in the future. So this is not a small project, this is a big project. Within a relatively small company, we have a market cap of circa 150 million. And we've got a team, which I'll touch upon, who've done this many times before. I'm not going to go through all of these points, but probably just draw you to the first 4 points. It's shovel ready, it's fully permitted, simple open pit mining and very conventional circuit. So we're not taking what is jargon in the industry, but we're not taking huge technical risk here. We're just building a big, simple project. Second quartile cash costs and a valuation, which is in the next slide, but a valuation of just under 1.4 billion with circa just under 600 million in capital. We're well funded, so our objective is to get to a financial investment decision by the end of this calendar year, and we have 50 million in the bank to do that. So, you know, that's our flight path for the remaining part of the year. Just go through this quickly. I'm sorry, this is not it's a little bit hard to see, but you can see the cash cost curve on the right-hand side of the slide and the valuation metrics at various copper prices on the left. It's interesting to reflect if you take on board the comment about the supply side shortage, Sean's presentation earlier, where we are in the copper world. For those of you watching the market, you may well have seen a transaction recently that occurred by Metals Acquisition Corp of Glencore's assets at Cobar for about 1.15 billion. And then if you just run your eye down that table, it's just interesting to reflect on the value proposition for Hillside. Same commodity, similar mine life, but that's our stage 1 mine life at 13 years. We have 3 times the reserves, more than 3 times the resources. Similar amounts of production, and we'll talk about that as time goes on. We have the ability to do a little bit better than that, and broadly similar sort of cost structure. So just contemplate it. If you look at it a different way, this is an image of existing ASX listed companies, their relative copper reserve position and their market capitalisation. And I suppose what's glaringly obvious there is Rex has a relatively low market cap and a very high reserve position of just under 1 million tonnes. How significant is Hillside in the scheme of things? Well, put simply, it's going to be one of the top 10 in Australia. It's not insignificant. And I think as time goes on, and hopefully I'll just illustrate this in the slide a bit further on, it has the ability potentially to grow. If we look at the Yorke Peninsula in South Australia, we have quite a large land holding. This is an image of our exploration leases and our mining lease at Hillside. Just under 2,500 square kilometres. The project is a classic, what they call IOCG deposit, not unlike the well-known Carrapateena and Prominent Hill deposits located to the north of that state. But the big difference is this is a near-surface project. It's very shallow. It's not at depth. So, you know, our ability to get in and develop it is quite quick. This slide just tells you one thing. It's big. As I said, the reserve of 1 million tonnes, resource of just under 2, and not at all closed off. So it's open to the south, which is to the left of slide, open to the north, and open at depth. And the dotted line is the stage 1 pit that we're planning to develop. And as you can see at the top of the image, the pit is approximately 2.5 kilometres long, so not insignificant, but commercially very viable. Bit of information on this slide, but just one message to leave with you. If you look at the team that's involved at Rex, and there are others as well, this is not all of them, they've all operated or developed or improved upon some of the better known assets, the copper assets around, copper and other assets around Australia. So we've done this before. We're not new to this, it's not our first rodeo. So we're feeling reasonably confident that we can get this thing built and get a very strong return for shareholders. As part of the bigger picture, and as I sort of touched upon, you know, copper is critical for the green, low carbon revolution. We're very embracing of that. We feel in that context, ESG is incredibly important, both locally, where we'll be a big employer, as a contributor from a revenue point of view to the state and the country, but, more importantly to the green revolution. So, that's a very big plank of what we believe. So in short, what's the next steps for Hillside? Obviously, as the project speeds up towards FID at the end of the calendar year, the team will expand, and that's just a normal flight path. We'll secure the appropriate debt funding. We've already had some very fruitful discussions, and they will continue, but it's about getting the right recipe to ensure the best returns. We'll move forward with the detailed engineering with our partner, Asenco, in sort of concert with that FID decision. Initiate offtake discussions. This is a very clean, high-quality concentrate, so it will be very desirable. And obviously announce that FID is our plan at the end of this calendar year. Just before I close, obviously that's our flagship asset. It's very significant and has very high value, but it's not the only asset in the Rex portfolio. As you can also see, we have a gold asset in Nevada in the USA called Hog Ranch. So since its purchase in August of 2019, the team has managed to grow the resource base from almost nothing, or pretty much nothing, to just under 2.3 million ounces. And you can see a summary of the table at the top of that right-hand top of the slide. Large, low grade, but very typical of that part of the world. This is a large epithermal system, and we've just initiated, which has been announced about 2.5 weeks ago, a major soil sampling program to build upon the knowledge to allow us to continue to potentially progress drilling at Hog Ranch. So just a snapshot of that. On the left-hand side, you can see a cartoon or a schematic of the major epithermal craton, which is illustrated in that dotted circle, our lease holding in the centre of that, and the pre-existing areas where we have defined resources. To the right, you can see an isometric diagram illustrating where we have the resources, which is, in brief, the pink areas at the surface. So we're attempting as we move forward to see whether or not we can expand upon that. And in addition, what we haven't attacked yet is the stuff that's at depth beneath that, which is illustrated in those sort of little fingers coming up. So this is very much watch this space. It's also a project of scale. This is not a small project. So just finishing up, and hopefully you sort of have picked up the thematic of the value proposition of Rex. Shovel-ready, fully permitted project in a first world country. We'll make a decision on that at the end of the year. It is, we believe, a very sustainable project in the more macro sense in the world, given the changes that are going on. We are very positive about the copper market, but even at current prices, they're tremendous. And this project looks very strong at these sort of copper levels. And of course, it's led by a team that's done it before. So with that, maybe I'll pause or stop and let someone else have a crack.
Thank you so much, Peter Bird. Scale contribution, sustainability, value proposition. Be interested to go outside and have a chat with you. Thank you very much. And I'm going to use your words for next time. Upright and sparkly tomorrow morning. We'll see how everyone goes. Our next presenter today is Matt Gill, MD of White Rock Minerals. Some of you may have heard the name. And it wasn't until I was reading through the bio this morning, I thought, that's where I know him from. Matt, actually during the Beaconsfield mine crisis back in 2006, and it's hard to believe it was actually that long ago, it was him that was leading the operation that successfully rescued those two miners that were trapped underground. So big stories to talk with him about outside later today. But what he's here today to talk to you about is what he's doing with his leadership, his grit and his strategic thinking. That same leadership he used during that crisis, he's using that to turn around the Morningstar gold mine in Victoria, except this time your goal is to rescue and liberate all that gold that's under the ground instead of those two fabulous miners. So let's welcome Matt and hear from him to tell us how quickly things are progressing and why White Rock could be just months away from becoming Victoria's next high-grade gold producer. Would you please make him welcome, everyone?
Thanks, thanks for that introduction. Thanks, ladies and gentlemen, for taking the time to listen to the White Rock story, and certainly thanks to the people at RIU for making it happen. As was mentioned earlier, it's nice to actually see people face to face over a coffee or a beer rather than on Zoom, sitting in your pajamas or with a face mask on. So yeah, the story is one of White Rock. We have 3 assets. You will find this presentation on our website and it's lodged with the ASX. So I will go relatively quickly through it. I have a booth, number 2. So through the foyer, through the doors, and I'm on the right if you want to come and have a chat afterwards. And if you're suffering from insomnia, you can read the disclaimer at your pleasure. So look, that's a busy slide. Because it's lodged, it gives the reader reading it rather than presenting an idea of what's to come. But essentially, I will touch on the Woods Point Gold Project, our Red Mountain project in Alaska, and very briefly, the asset that White Rock was listed with, Mount Carrington here in New South Wales. So the 3 projects, as I've mentioned, so Woods Point has a great historical production history, and I'll touch on that. It's about 150 kilometres east of Melbourne. White Rock's based out of Ballarat, so it's actually nice to have a project in the same state. And I think that's an important consideration for an investor in this COVID world. Now, clearly borders have been softened, although who knows what happens in the future. And so having a project that you can put boots on the ground and see and manage closer to home is important. But then having said that, we have an asset in Alaska. And obviously we weren't able to get there. We could have got there, but we wouldn't have been able to get back home thanks to Victorian rules. But we have a great team in Alaska out of Fairbanks that have been our project managers for 4 years. And surprisingly, many people probably don't realise it's only a 6-hour time difference. So it's a very, very favourable time zone to be talking and chatting with the crews there. And then the asset that we listed on Mount Carrington is between Casino and Tenterfield in northern New South Wales. So a little bit about what we are at a high level. So, you know, we have the 3 projects that I mentioned. Victoria with a past producing gold mine processing plant, 2 mining leases and a large tenement package of what many people will tell you is underexplored, and you can come and have a chat to me afterwards. I'm a mining engineer, so I like to talk about facts and not get too excited, but certainly has been underexplored with great potential. The USA, so the Alaskan asset, when we acquired it, was 15 square Ks. With the success that we've had with exploration, it's now out to over 860 square Ks, and New South Wales, our Mount Carrington asset. So I think that jurisdiction diversification is important for the investor to consider. You know, they speak English. In Alaska, you can call it English, but certainly I think it's important, you know, tier 1 jurisdictions follow the rule of law. But then also in commodities, you know, whether it's battery metals, lithium, what have you. And we've got great exposure across gold. This is not financial advice, but as a mining engineer, I'm very happy to be dealing with gold. I think it's shown its worth over time. Silver, not many people understand the silver market, certainly in Australia. We're one of the few that have a genuine exposure to large JORC silver deposits. And also zinc. Now, as you heard before, if I had my choice, I'd probably like copper, but if I can't have copper, I don't mind having zinc as a base metal. So we've got JORC resources, so, you know, independently determined and verified. So significant amounts of zinc, as I've mentioned, gold and silver. On a combined basis, you know, 800,000 ounces of gold, 84 million ounces of silver, to give you some idea, is over 1 million ounces of gold equivalent. Given the gold-silver ratio, and as I mentioned, significant amounts of zinc and lead. I'm not the last managing director that will ever stand in front of you and say that we're undervalued, and I think therein lies the opportunity. So here are 4 independent valuations where White Rock has had no say at all in the value determination of its assets. And you can see some numbers. So there are 4 data points. Valmin is probably the most useful. It's an independent, internationally recognised code like JORC. So you can see the values ascribed to Red Mountain variously, Mount Carrington and Woods Point. The bottom line averages, multiples of our market cap. Now, I'm not naive enough to think that we'll ever get true full value, but I say, even if they're half right, I think therein lies an opportunity. And I guess my job as the MD of the company is to try and extract some of that inherent asset value that others see, extract that into the share price and the market capitalisation of White Rock. So capital structure, I won't spend too much time other than shareholders. I think it's important for a potential investor to see who else has put their money into a company. Have they done their due diligence? What sort of bona fides do they have? Our largest shareholder is Crescat Capital. It's a precious metals fund out of Denver in the US. I think that's an important point. We've got a couple of high net worths based here in Sydney, but we've also got within those nominees a private equity group out of New York. We've got the Zijin Sprott joint venture out of Hong Kong, and we've got 2 Swiss funds in there as well. So that's just an example. And, we've got about 5,000 shareholders. Hopefully some of them are here today, and I'm more than happy to have a chat afterwards. So Woods Point, I will go fairly quickly. So Victoria, so I'm a proud Melburnian, have worked all around the world. So I ran the Ballarat gold mine in 2010, where gold was on the nose in Victoria and people were pretty much getting out of Victoria. Bendigo wasn't a good story. Ballarat wasn't a good story back then. But I've always, I guess, looked as a mining engineer at the underlying asset fundamentals rather than the corporate overlay that often trips up companies. Victoria does have a proud history. I remember speaking at Diggers and Dealers telling West Australians that actually gold does come from other places other than just Western Australia. And most people now in this Renaissance Mark II will have heard of Fosterville. All I can say is lucky bastards. And hopefully we won't be too far behind in terms of grade that we'll mine. So it is going through a second renaissance. Look, Victoria is tough to permit, just as New South Wales. Just are many other jurisdictions. But again, rule of law, speak English, follow due process. And there are some good other mines in Victoria, not just Fosterville. So where we are, so it's a 2-pronged approach with the Woods Point Gold Project. We acquired it by way of a merger only in August last year. We had 2 drills going since October, and we've now identified at least 3 areas above 9 level underground, and I'll touch on that, where we're ready now to do that pre-production development, verify the diamond drilling. It is narrow vein, high grade underground nuggety quartz reefs, and I've had experience in that, and the drill bit doesn't lie, but development into those reefs is critical to confirm the geological modelling of these fairly tricky reef structures. But also the regional exploration potential, 660 square Ks. It's yielded over 1.5 million ounces. We've got at least 10 historical mines, very little drilling. So there's as much excitement in the White Rock team at the regional exploration as there is underground. So what is it? So the Morningstar Gold Mine, last by GMA, so Gold Mines of Australia, which was the forerunner to Western Mining for those that know of Western Mining, now part of BHP. So this gave birth to Western Mining. Not many mines have yielded that sort of ounces at that sort of grade. The shaft goes down 800 metres. It's flooded below 10 level. So we've been developing and drilling above 9 level, but we're also drilling below 9 level at a thing called the gap zone. Infrastructure in place, if you remember the pictures, it's got a shaft winder. We've got 25 people on site. We've got a fully permitted, ready to go gold processing plant. So the 4 areas that we've got, in the upper areas, we've got what we call Dickinson. In the middle, we've got an area called Kenny's McNally's, and below 9 level, and very excitingly, we've got this gap zone, which we only put out an announcement on Friday. And that's the drilling. So in the upper levels of Dickinson, we drill from surface, and for Kenny's McNally's and the gap zone, we drill from underground. So even within the Dickinson area, we've got multiple reefs, and the trick with Morningstar will be to have multiple working areas over multiple levels. You can read these intersections at your leisure. They're all on the ASX. You can see they're fairly narrow, 1 to 2 metres, but significant grades, 1, 2, 3 ounces a tonne. And that's the key asset, and the key thing that we need to be mindful of is not to dilute the grade. So it'll be low tonnage, but it'll be high value tonnage where the dilution is kept to a minimum. It's narrow vein mining, so it's air leg, and that's important. We're not going to go bulk tonnage. Bulk tonnage gets you volume through the mill, but you've diluted the grade, and you spend your money moving tonnes, not moving ounces. So the less tonnes we can move with more ounces in those tonnes, the far more economic we'll be. So then in the Kenny's area, again, we've had significant success in the drilling that we've been doing since October. And you can see some of the grades there as well. So 4 areas that we'll be mining. And then excitingly, the gap zone. Above it, 500,000 ounces were mined. Below it, 300,000 ounces were mined. But in the middle, very little drilling, no mining, because they pushed the shaft through that post-World War II. So you can work out if it's a 200-metre vertical by 60 metres wide, by about 600 metres long, you can hide a lot of gold in that. And we're doing that drilling as we speak. And that's the announcement that we put out on Friday. So only our second hole towards the middle of the ore body, which is that picture in the middle. We did do some drilling on the very northern flank, but this is the first decent hole, hit an unknown reef with visible gold, assays pending. So there's the plant ready to go. We intend to increase the workforce in terms of mining and processing people, and do some of that development, some of that capital, and start producing gold. Regionally, we have a significant land package. You can see some of the historical mines. You can see some of the occurrences of gold over 30 and 60 grams a tonne. Pretty much underexplored, held by small juniors with never the balance sheet or the patience or the time to commit to the decent exploration program opportunities that exist. And that's what we see exciting as well. And you can see that we hold a lot of project tenement holdings with targets that we want to work on. So we're working up a program. Again, you can see some of the land holdings and some of the occurrences that we've got in our tenement package. And a first priority for us is this Wallaby target. It was mined down to the water level by the old timers and stopped. Didn't have a lot of tonnage, not particularly high grade by Woods Point standard, about 10 grams a tonne.